Hello, this is Jason from mapsignals.com coming at you with the best ETFs for July of 2021. We got a lot of views on the last best of ETFs for June video, so we figured we'd keep things rolling right along. But before I do not forget, if you like what you see, hit that like button. It helps get us seen so we can know if we're doing a good job. Same goes with comments down below. And if you really like what you see, please subscribe so you get all the latest updates and the best videos that we're putting out, best growth stocks, best dividend stocks, best ETFs, hot stocks to buy right now, all that good stuff coming at you. With that out of the way, let's just get right to it. So I explained last time how we go about finding the best ETFs to buy. Let's begin. So I'm going to share my screen right here. And we are going to head over to mapsignals.com. That is our website. That is where we go to find what the big money is buying. Remember, don't follow the news, follow the big money. If you want to know where the juice is, this is where you go. So our members can come right over here to the big money charts. So this is where we're going to start seeing what the big money is doing. So we're just going to do a quick check-in in the market really quickly. First and foremost, the big money index. This tracks all our big money buying and selling on stocks on an individual basis, and we smooth it out over 25 days. That's what this blue line is. Honestly, the quick and easy is this just tells you quickly where the big money is trending. And after you can see about a full-on month of flatlining, we saw a big ramp up in big money buying events of stocks. So it kind of tailed off just a little bit recently, but we're getting close to overbought. This is not a danger area to get scared about. This is actually a good thing because we can expect when you see big money buying, you can expect prices to continue to rise. Okay, so that's our first check-in. So we know big money's coming into the market. Well, what about ETFs? What we noticed over the past few months is we saw some significant buying in ETFs. Look over here. At one point in May, it was 63 ETFs being bought, 52 ETFs being bought the first of this month, and we're still seeing some sprinkled buying. So what I did is I went through and I found all the ETFs that were actually saw big money buying flowing into them. And because ETFs, don't forget everybody, ETFs are a basket of stocks. So when you buy an ETF, you're buying either a portfolio that mimics an index, like the S&P or the Russell, or you're buying a thematic ETF that has a portfolio manager that's looking to do like ESG or solar or growth or whatever. It's a portfolio of individual stocks. And again, if we know which stocks underneath have the best fundamentals, the best technicals, and see big money buying them, those are the juice stocks. If we know there are outliers in the ETF, that makes a better bet for safer buying of an ETF for future price appreciation. So we went through, we found which ETFs there were. I looked under the hood and I found the stocks, and now the pièce de résistance. Let's get to it. So here's a sneak peek, everybody. We are building out our technology. This is a database that soon all of our clients are going to be able to access themselves. Our first ETF. Oh, before I do that, I wanted to show you. These are all the ETFs ranked and scored all the way down. So we filtered out everything that has low liquidity, that's maybe just bonds or non-stocks. These are all our stock ETFs that trade on decent size. Right away, we notice there's some real estate right at the top. Our very first ETF this week is going to be IYR. That is the iShares real estate ETF. And what you'll notice right here is you see these green signals here. Boom. That is big money buying over the past year. We see a bunch of signals, and quite recently as well. That is a great sign. Big money's been flowing in. The world is reopening. Real estate's going to come back from the dead, etc. That's been a theme for a while now, but now it's starting to pick up steam. And again, why don't we look at a stock? Let's pick one this time. Prologis, okay? IYR holds Prologis. This is a great REIT here. You can see on the left, it too has seen big money buying over the past year. Again, if you see red over here, maybe some fund was forced to sell it out, but if the stock has great fundamentals and technicals, it's an opportunity to buy it. This is a highly ranked stock. It's got great sales and earnings growth, great profit margin. And just recently over here on the right, you can see it's part of the Map Signals Top 20 report. That's our creme de la creme. It's appeared 5 times, but all in recent times. That's actually very promising for the future. Okay, next up is a cool ETF. Let's go back over here. We are going to look at BOTZ. I just really like the name, but more importantly, it is a very cool theme. It's robotics. I need a robot to speak for me. It's robotics and artificial intelligence. Okay, what do we notice? Over the past year, we saw a ton of big money buying. There was a momentary sell signal in March. Things didn't look so hot, but again, should we be concerned if it holds great stocks, if it gets sold? No, actually, that's kind of a contraindicator sometimes. So the Global X Robotics Artificial Intelligence ETF, what does it hold? One of my favorite stocks is in there, Intuitive Surgical. Okay, this is a phenomenal outlier stock. It's appeared 69 times on the top 20 report since 2004, including our back test here. Look at all that. Stairway to heaven, goes straight up. It's up like 8,000% since our back test caught it. It's still climbing, more than doubled since late 2018. Over the past year, over here on the left, we see big money buys. Again, a couple of red sticks. When markets come under pressure, people have to sell everything. So when you get a great quality stock with great sales and earnings, great profit margins, like Intuitive Surgical, you want to be long that juice. And this is inside of the BOTZ ETF. What does Intuitive Surgical do? They make the Da Vinci robots that you can be a surgeon and operate remotely. Hypothetically, a surgeon from Boston can perform a surgery in India on one of these amazing robots. Company's been around for a while, crushing it. Just really cool. So this ETF holds a bunch of these artificial intelligence and robotics types of stocks. Really great story. I think we all know where the future's going there. Lots of buying. Next up is a Vanguard Energy ETF. Okay, I'm sure you've all heard of Vanguard products. This is a portfolio of energy stocks. What are we seeing in the past year? After being on death's door around the election of last year, we saw a bunch of big money buys coming in. And very recently too, right? Again, we want to know, are they holding good quality stocks? And the answer is yes. This is a unique stock. Diamondback Energy has great sales and earnings growth, great profit margins. We've seen, again, around the time of the election, there was a lot of selling on this stock, but buying has picked up considerably recently, and it's starting to spring back to life. This was a great top 20 stock for a while, more than doubling in a few years, fell from grace, and now it's rip-roaring higher. Vanguard Energy holds Diamondback Energy along with a lot of great other stocks, you know, like the bellwethers like Chevron and Exxon, and energy's getting a resurgence, right? People are going to drive again, travel again, fly again, all these things. All a very good setup. Let's move on to our fourth ETF, and this is a little bit out of the box here. This is the Lithium and Battery Tech ETF. So there's a lot of commodities in here, but there's also a lot of stocks related to lithium and battery production. And why is this cool? First and foremost, saw a lot of big money buying up until the new year, took a little break, got a little selling here. Again, does it hold great stocks? Should we get nervous? If the answer is they hold great stocks, don't get nervous. Get involved, right? Recently, we saw a couple of buy signals. Again, why is this cool? Well, it holds very, very well-known stocks. We all know Tesla, right? Love it or hate it, they're doing something right. They are making electric cars. Their EV market is kind of changing the way we perceive things. And even if you hate Tesla, they have totally lit a fire under the butts of all the other major manufacturers who are now rolling out their own EVs. What does that do? Everybody needs batteries. What do the batteries run on? Lithium. So if there is a global shortage of lithium, the price of lithium is going to go up. The price of the products from lithium, battery manufacturers, all that cool stuff is going to go higher. At bare minimum, if there's no shortage in lithium, there's going to be a surge of demand. Everybody's starting to get involved in electric vehicles. Tesla is paving the way. It's a great stock. Again, you see that big money buying last year, momentary selling. Throughout the years, you know, it's a rocky ride, but that stock has a very, very clear trend. It's been on our top 27 times. Last but not least, let's move on over to our final ETF. Once again, Kathy Woods, ladies and gentlemen, this week it is, or this month, I should say, it is the autonomous technology. And again, robotics, there's that theme again, ETF, ARKQ. Again, bunch of big money buying over the last year until around February when growth peaked. And you remember ARK came under pressure. We picked last time ARKQ. That thing has, ARKG. I think the Genomics Revolutions ETF, it's up around 12% since we got involved last month, since we recommended it. We saw sell signals. Again, it's starting to bounce. Do you get nervous when you see sell signals with great stocks? The answer is no. Does it have great stocks? Full disclosure, this stock is a massive juicer. I own it in managed accounts. It's a personal holding. Look at this. You see the big money buying. They're a chip maker. We saw momentarily selling. Those were great opportunities. Historically, this stock has great sales and earnings, great profit margins, and a hot sector. The stock has appeared 60 times on our buy report. You know, even going back to when we went into business map signals, looking at around 2014, that stock went from 20 to 140. Juice, that's what you want to own in an ETF. So if the ETF is holding stocks like these are better bets for you. Okay, so there you have it. We got the top 5 ETFs. I wanted to share my screen one last time to show you a quick summary of the stocks and how they score. So these are our 5 ETFs over here: IYR, BOTZ, VDE, LIT, ARQ. We profiled PLD, scores very high on our composite rating, around a 76. Strong technically, good fundamentals, 62.5%. BOTZ, Intuitive Surgical, scores 74 overall. Strong technical, 76.5%. Fundamentals, right around 71%. Keep in mind, this is out of 6,000 stocks, so these score really strongly. Diamondback Energy had a strong technical surge recently. The fundamentals are so-so, but we feel like energy is going to see an influx of capital and consumerism coming back in to sort of refresh the area with profits. Tesla, it went a little weak on its knees. So something you need to know about LIT and ARQ is I went down bargain hunting for technically weak ETFs and ETFs that have strong fundamentals. So, you know, just going back over here for a moment, if I go to the bottom of my list and I look up ARKQ, we look over here, it's got a 54 technical, so that's kind of weak, but 61.4 fundamental. That's actually really strong. So it screams of a potential value trade. Same goes for lithium. If I find it here, 61 fundamental, 57 technical. So again, looking at the stocks, same story, right? Tesla's got a weak overall score, 53 technical because it's on the weak side, but a 75 fundamental. Making money, making profits, increasing sales. Teradyne, again, disclosure, I hold this stock in managed accounts. You must know that. Composite score of right under 71. Fundamentally, it is very strong, 83.3. Technically, it's a little weak. We're looking for deals. So there you have it, the top 5 ETFs for July of 2021. I hope you enjoyed it. If you have questions, you have comments, even if you think we stink, please tell us. We want to improve. Don't forget to like what you see if you do like it, and subscribe for more information. And if you want even more information on how we look at stocks, look at market, how we look at the big money, head over to mapsignals.com. You can sign up for the free blog there. You don't need to buy anything, and stay up to date there too. So with that, I'll leave you. I hope you have a great rest of the summer. If you're vacationing, please enjoy. We're still trying to figure out what we're doing. And just as a nod to the reopen trade, good luck booking anything. Everything's booked. It's hard out there. So I'm very bullish on stocks, on the economy, on the reopening, on the rejuvenation of our way of life. Let's use these 5 ETFs to help us see great promise for the future. I hope you have a great rest of the month, and I will see you next time. Don't follow the news, follow the big money. Thanks. Bye.